after a solid week of stocks.
Yeah. The major indexes moved higher as traders keep tabs on the Middle East to see how fragile ceasefire, this fragile ceasefire between the U.S. and Iran is progressing. And it's all happening as earnings season warms up. Let's talk about it with portfolio manager and economic analyst Michael Berkentine. We're also joined by economic strategist and chief information officer of Tuttle Wealth Partners, Francis Newton. And, of course, our special guests are with us, Gerard and Monica. Thank you, guys, for being with us. Michael, we'll start with you. There's a lot riding on this ceasefire. So what is going to move the needle for investors? Obviously, it affects everyone thinking about their retirement, those that are 5 years away, a few years away, or in it. What's the best way for people to protect their money during this tumultuous time?
So, Bill, thank you for having me. This has been such a great thing to see this ceasefire come about. It's such a great time to be an American right now. You know, you look at oil prices are down, the stock market is up, and the ceasefire just creates stability in the short term. And it's just been incredible to be a part of and watch the negotiations and the power that the president has and leadership for Americans. You know, I think that people are on hold right now. You know, from the housing industry that I come from and stem from, you know, people are kind of in a wait and hold pattern, you know, in terms of, you know, do I put my money in the stock market? You know, do I buy housing, real estate? Do I buy a new house for my own family? So I think people are kind of just sitting and waiting a little bit. And I think, you know, overall, because this is going to be a short-term relief, I think the long-term benefits are soon to be had. And you have J.D. Vance over there now getting things done. And you think about this, reflect back to the pre-war. We had gas prices that were in the pre-COVID era. So, you know, this is a president that is energy focused, and that's where we need to be.
Yeah, I want to bring Francis here in as well, though, because, you know, inflation is something that's being driven up by the war too. The latest data shows it's reaching 3.3% in March. That's almost a full point more than the month before because of the spike in oil and energy costs. So how much will this actually hurt the consumer here?
Yeah, it's the perfect question. So the Dallas Fed has now modeled that if we have a 2-month closure, then WTI hits $132 a barrel. But every day that the Strait of Hormuz is closed, inflation increases. Initially, Trump was willing to end the war without opening the strait because keeping the strait closed hurts China's GDP. We have a big chessboard here where Trump is trying to keep America's leverage very high by keeping the GDP and the consumer very high for trade negotiations. But now realizing how much gas prices are affecting us ahead of the midterms and oil is affecting us. So we hope that Saturday's negotiations go well. Iran has not, they're letting a few ships through, but they're not really letting the normal flows continue. But a 2-month closure will bring oil to $132 a barrel, which would be crippling.
Monica, what do you think?
What do I think? Well, I mean, it's all about the strait, and we also have to take a look at how these negotiations are going to go about today. I think investors are looking to see how markets are going to react to that. Obviously, I'm personally always for long-term investing in tech, but at the same time, a lot of people right now are looking into precious metals as the perfect inflation hedge during this kind of a time. So these are just a few options. But again, watching these negotiations coming out from Saturday's meetings, then also what's happening in Washington next week as well.
Yeah, with Israel and Lebanon.
And Lebanon, Israel, exactly.
Well. That's also going to be something that we'll keep an eye on out of D.C. But, Gerard, your opinions too.
No, the markets like consistency. And it's not just this war and the inconsistency of whether the oil market is going to be hit or not, and what we've seen with inflation. Tariffs are still on the table. We still need to see what's going on with tariffs, and that's a factor as well.
Michael, let's talk about inflation as a voting concern. You know, Trump is not a fan of Fed Chair Jerome Powell, but can the two do anything to stop it from hurting the wallets of average, everyday Americans? It seems to be the middle class always gets the brunt of any of these actions.
Yeah, I mean, too late, Powell is obviously too late. The president gave him one of the greatest nicknames, I think, that is in his Rolodex. But, you know, our change in Fed Powell in May and the first meeting being in June is going to be unprecedented for our market. So I really encourage people to prepare, have faith, and be ready for one of the greatest economies in Q4 into 2027 that America has ever seen.
All right. Francis, final words to you.
Well, it looks like we could have a potential reacceleration in growth as inflation marches higher. So hopefully that serves everybody. Trump is very well aware of the midterm elections. He's going to do everything he can to get these oil prices down. And when it comes to Powell, traders are pricing these rates in. It's the bond vigilantes that Trump has to worry about, not Powell.
Well, I do love Michael's optimism on this.
Yeah.
So Francis, Newton, Michael Burkentine, thank you guys very much for joining us. As
Thank you, guys.
diplomats test a fragile